Today we're going to be discussing the disability buyout insurance. This is very, very important insurance if you are an owner, if you're a partner, or if you're a shareholder. All of these people here, obviously, they have interest in making sure that the business will continue on. In a disability buyout a type of policy, what happens is basically the two partners, let's say in our example, buy disability insurance on each other, so that in the event that one of them should become disabled, then obviously a certain amount of money gets paid out to buy the disabled partner out. But in order to achieve that, in order to actually have that happen, what's very, very important is you must have a buy-sell agreement. The buy-sell agreement basically is drawn up by your lawyer. The lawyer then will decide how the wording will go and everything. And essentially then the insurance company basically designs the insurance product to actually fit the agreement. So in essence, really, the buy-sell agreement, you might say, is actually done in advance of the actual disability insurance itself. Okay. And usually what happens with insurance companies is they're going to want to have at the very least 2 years of actual business in force. In other words, this is not for brand new businesses. It's really, you have to be around for at least 2 years to actually qualify for this particular coverage. So therefore, it is very important that the buy-sell agreement be drawn up almost right away while we actually do the underwriting to actually buy the disability. And remember that 2 years as well. So now, what's very, very important here to understand is that this, again, is insurance. Could be on partners, it could be on employees, in other words, on anybody that wants to buy the deceased business, basically. So anybody at all that is interested in buying into the business may want to actually buy this kind of insurance on that individual. So therefore, if that individual should become disabled, then of course we've got the money. Now, what it actually gets paid out on a tax-free basis, and I might add, is a lump sum. So it's very similar to life insurance in a sense that if you become disabled, it's not a monthly income that you're going to get. You're actually going to get, let's say, $500,000. One thing that's very important to remember is that you cannot have more disability buyout insurance than you have life insurance. In other words, it could be less, but it can't actually be more. But it is, in actual fact, a lump sum payment. Now, along with any kind of disability plan, as you know, you've also got what's called the elimination period, a waiting period. In other words, when will, in fact, this benefit actually be paid out? Well, in this buyout insurance, what we actually call it is called the trigger date. So the trigger date is really the date that, in actual fact, the claim will go in. That trigger date could be at 12 months. In other words, the elimination period is 12 months. It could be 24 months. It could even go up to 36 months, which is rather unusual. But nonetheless, that's what we call the trigger date. So in this case here, it's not so much an elimination period as much as, in actual fact, a trigger date. Now, what's very, very important when we buy disability insurance is that you have to substantiate how much disability insurance you actually need. In other words, the insurance company is going to be asking for, at the very least, the last 2 years' financials. They're going to be looking at your profit and loss statement. They're going to be looking at all sorts of various different things in order to establish an actual value. So it's very important that the partners be notified that they must get this material ready. The accounts usually will do that for the individual anyway, so it shouldn't be any real problems. Now, and disability insurance can protect, obviously, the business owner who wishes to sell his business or sell his or her stake in the company. The buyer may want future protection, and make sure that there's always a buyer, somebody out there who's willing to buy that particular business. So therefore, it gives them peace of mind and everything. So once again, what we want to emphasize that this is, again, for the business. It's not so much for the individual.